stop driving. Seriously. If you're in a car, find the shoulder. If you're at the gym, hit the stop button on the treadmill. If you are about to order a coffee and complain about the price, save your breath. Because in 6 months, that coffee is going to be a luxury item. I need your undivided attention right now. Turn off the music. Listen to me. Because we are watching history shatter in real time. It is Thursday, January 29th, 2026. And if you thought the beginning of the week was chaos, you have no idea what just happened. We are witnessing a financial anomaly that textbooks say is impossible. We are seeing a total eclipse event in the markets. Usually the game is simple. Risk on or risk off. When people feel rich, they buy stocks. When people feel scared, they buy gold. The seesaw balances. But today, the seesaw didn't just tip, it broke in half. Everything is vertical. The S&P 500 just smashed through 7,000 points like a freight train running through a paper wall. At the exact same second, gold hit an all-time high of $5,300. And silver, the metal they told you was worthless at $90, just ripped through $115. The president is on social media right now, typing in all caps, "Greatest economy ever." And if you don't know any better, you might believe him. You might look at your 401k and think you're rich. Do not fall for it. Do not buy the boat. I'm here to tell you what it actually means when stocks and gold go to the moon together. It doesn't mean the economy is booming. It means the currency is dying. This is the crack-up boom. It's what happens when the public realizes the money is broken. So they panic buy anything that isn't cash. The stock market isn't up because companies are selling more products. It's up because the dollar is crashing down. We are seeing the Venezuelanization of Wall Street. And while the politicians celebrate the green numbers on the screen, the plumbing of the real world is seizing up. You might look at $115 silver and think, wow, that's expensive. But here's the terrifying question. Can you actually buy it? Because the news coming out of the East suggests that the price is now just a theory. We have reports from the manufacturing heart of China that the metal has stopped flowing entirely. We need to talk about the Shenzhen Blackout. We need to talk about what happens when the factory of the world goes 15 days without seeing a single ounce of silver. Shenzhen isn't just a city, it's the engine of global electronics, specifically the Hubei district, the jewelry capital of Asia. Usually this place is flooded with armored trucks. Today, silence. We have a confirmed report from local industry wires. Half a month without inventory. Let that sink in. For 15 days, the biggest wholesalers in China have received 0 deliveries from the Shanghai Gold Exchange. They have the money. They are screaming at their brokers. But the vaults are empty. This is the nightmare scenario. Silver isn't just a shiny rock. It's a strategic component. You can't build a solar panel, an EV key, or a guided missile without it. When the factories in Shenzhen run dry, the assembly lines stop. And when the assembly lines stop, the panic begins. We are moving from a price crisis to an availability crisis. A manufacturer in Beijing doesn't care if silver is $115 or $200. If he doesn't get the metal, he goes bankrupt. He will pay anything. So, while the algorithms on Wall Street celebrate record highs, the physical supply chain is suffering a cardiac arrest. The atoms are missing. And usually, in a shortage, dealers would be begging to buy your silver. They would be bidding up the price. But here's the twist. Here's the part that makes no sense unless you understand the liquidity trap. While the price screams higher, dealers in the US are freezing up. They aren't buying. In fact, if you try to sell your stack today, you might get a nasty surprise. We have reports of major wholesalers putting up the no bid sign. Why would a dealer refuse to buy silver at $100? Because they are broke. This is the liquidity trap. Dealers are asset-rich, cash-poor. They spent the last 3 weeks buying inventory as the price ripped from $70 to $100. Now, they have vaults full of metal, but their bank accounts are empty. They cannot monetize the inventory fast enough to pay you. So if you call them today with a 1,000-ounce bar, they might offer you $90 when the spot price is $115. They are charging you a desperation fee. They are hoping you're scared enough to sell at a discount so they can flip it for quick cash. Do not do it. Do not sell your generational wealth to a dealer who is having a cash flow problem. This is temporary. The industrial buyers, the Teslas, the Raytheons, they will bypass the dealers. They will pay the full price. But right now, the market is broken. But if you are still worried, if that lowball offer has you doubting the rally, I have the ultimate signal for you. The one indicator that has a 100% success rate. The cavalry has arrived. And he looks like a bald man on TV rolling up his sleeves. Jim Kramer has officially capitulated. At 10:45 a.m. this morning, right as silver was breaking out, Kramer tweeted this. "This silver move is ridiculous. Parabolic moves end in tears. I'm selling the family silver. Bears win here. Sell, sell, sell." I want you to print that tweet out and frame it. Because in the laws of market physics, Jim Kramer is the angel of death for any trade he recommends. Remember 2008? He said Bear Stearns was fine 5 days before it went to zero. Remember Silicon Valley Bank? He said buy it right before it collapsed. The man has a supernatural gift for being wrong at the exact moment it matters most. If Kramer says sell, it means the top is not in. It means we are nowhere near the top. It means the FOMO phase hasn't even started yet. His tweet is the all-clear signal for the algorithms. He is shaking out the weak hands so the strong hands can accumulate more. Thank him. He just poured gasoline on the fire. And while Kramer is selling his family heirlooms for pennies, the real whales are doing the opposite. They are backing up the dump trucks to the COMEX. We just got the delivery numbers for January. And if you thought Shanghai was bad, New York is a crime scene. January is supposed to be a quiet month. No deliveries, no drama. But this January, we just saw 9,608 contracts stand for delivery. Do the math. That is 48 million ounces of silver. That is 1,500 tons. In a month that usually sees zero action. The drain is accelerating. Wells Fargo just had to step in and take delivery of 52 contracts for their own house account. When a bank is scrambling for physical bars, you know the panic is institutional. If this drain rate continues through February, the COMEX vault will be effective empty by March. That means the only metal left is owned by people who will never sell. The for sale sign is coming down. And the smartest money in the room sees this. Look at Eric Sprott, the biggest whale in the sector. He just bought another 100,000 shares of Hycroft Mining at $49. Why buy a miner when the metal is at an all-time high? Because he knows that when the vault runs dry, the mine becomes the vault. Owning the metal in the ground is the ultimate call option on the collapse of the exchange. He is positioning for resource nationalization. He is positioning for a world where atoms matter more than bits. And notice where the money is coming from. It's coming from crypto. The Bitcoin to gold ratio is crashing. People are realizing that when the lights go out, you can't barter with a digital token. You need physical assets. The capital's rotating back to the original hard money. So here's the verdict. We are living in a bipolar world. On one side, the S&P is 7,000. The president is celebrating. The screens are green. On the other side, the factories in Shenzhen are dark. The dealers in the US are broke. The vaults in New York are empty. And Jim Kramer is panic selling. The split is the most dangerous moment for you. You will be tempted to sell. You will be tempted to take the paper profits. Do not do it. Do not trade the only asset in the world that is in a global shortage for a currency that is being printed into oblivion. If the dealer offers you $90, hang up the phone. Wait for the industrial panic to set the real price. You are holding the ace of spades. Do not fold just because the other player ran out of chips. We are watching the death of the dollar standard. The transition is messy, it is volatile, but the math is inevitable. The paper is infinite, the silver is finite, and right now, the finite is winning. Hold the line.